Hello and welcome to another update video about Bitcoin. So we're following here a possible breakout pattern to the upside for Bitcoin to identify a tradable low under which we could possibly really break out to the upside. Few things to mention here. One thing is that this is in no way confirmed. So again, we always want to see the evidence in the Elliott Wave patterns. At the moment, we only have a 1, 2 and a potentially emerging wave 3 to the upside, where we are in the subwaves, and we take a look at that in a minute. But we also want to see volume as confirmation. We don't really have a lot of additional volume. Then, on the other hand, we also want to break above key resistance here. We have a little bit of an additional volume compared to May, but really, so in the last few days, there isn't really anything that would that would highlight we have a lot of additional volume specifically for the wave 3 in which we should now be in. Yeah, so we're lacking the volume and we haven't broken through key resistance, and it's always important to not only get the confidence through the Elliott Wave patterns, but also by breaking through certain key resistance areas, structural levels, which are just from a high level point of view very, very important. Okay, so I'm showing you here the possible bullish breakout scenario, even though this one is getting a bit messy. Yeah, a lot of overlaps, which would rather confirm the view, which is actually still my primary expectation, that we are going to see another low below 17,500. That remains my primary expectation until the market would prove me otherwise, which would mean that we are then following the bullish scenario here and would break above 23.3k. It's still worth tracking this one, because we want to have it on the radar, okay? We want to have this bullish scenario on the radar so it doesn't surprise us. And bear in mind, in any good and serious TA, there is always a bullish and a bearish scenario. There has to be, because nobody has the crystal ball and the market can decide both ways. And we need to understand, we need to be prepared for both scenarios. If you find a TA that gives you only one scenario, it doesn't really give you the full picture. Okay, so where are we here now in this scenario? So we are currently, as I said, we might have completed the wave 1 here to the upside. That's how it's currently looking like. Wave 2 to the downside. That's been like that now for a week or so. Then in the bullish scenario, we have a chance here that we made a wave 1 to the upside, a wave 2 down. This here would be another 1 and a 2, and this now another 1 and a 2. So again, this makes it a little bit less likely, because the more 1-2 patterns you have, the less likely it gets, and it gets then at some point more likely that it actually is just an overlap and the corrective pattern, okay? But in the bullish scenario, which is still a very possible one, a very valid one, yeah, we would now be looking for wave 3 here. This wave 3 in green, that should push us higher. But in the wave 3 in green, there's also two possibilities here. So either we have already seen the wave 2 low, that we can assume until we break below 19,741. So let's take a look at the Fibonacci retracement levels, and here we can see we already touched the 61.8% Fib level at 19.8k. As long as we see further strength here, we can assume wave 2 is finished. Best evidence for that would be a break above 20.7k. If we start to see here more weakness in the chart, my first thought would be that we have not finished wave 2 yet, that wave 2 is going a bit lower. Key support for that is 19,600 and maybe 19,455, the 88.7% Fib level. Then we would get an ABC correction here on the 1 hour time frame. Definitely we shouldn't go lower than 19,300. If we go lower, we would technically invalidate this particular wave count, but not necessarily the uptrend. The uptrend, in my opinion, will get invalidated. So first of all, 18,762 will make it very unlikely that we're still in the bullish scenario, and the here the move below 18,600, yeah, it would invalidate this entire bullish wave count. So we need to be aware of these two levels. Until then, we can focus on higher here, because we are making higher highs and higher lows. But with all these 1-2 patterns, it's just getting a bit messy. It's just getting a bit unlikely, okay? And again, best evidence for the next breakout to the upside would be a move above 20,720. And yeah, we should not go below 19,294 in the first instance. And however, if we go below the 61.8 Fib level here at 19,839, the first thought would need to be that wave 2 just wasn't finished yet. And then we have an A, B, C. So this is the bullish scenario. Again, in my opinion, not yet the primary one. However, best at the moment to allow for both options. The moment I'm giving you the bullish and the bearish scenario, that wasn't always the case. I do this at the moment because we can be in a valid breakout pattern here, but again, with the messiness of the chart here, it's just getting less likely in my opinion. I used to give you only bearish scenarios because we were in a clear downtrend and we saw the trend reversal happening in November, December, and it was for me clear to go down into this range here, and now we are in a possible reversal pattern, so we must look at both scenarios, okay? So the other scenario is the bearish scenario. Let's take a look at that as well. Yeah, and this is the bearish scenario where we are coming down here in an impulsive move to the downside from the wave 4 up here at 21,900. We moved down in a wave 1, moved up in a wave 2 in red. Yeah, we then came down in another wave 1, moved up in a wave 2 in yellow. That went a bit higher, didn't really invalidate anything. It just means the wave 2 moved over here. So overall, doesn't change anything here, because we did not, with that high, we did not move above the other one. And even if we do, yeah, should we have another high, it is still very much possible that this wave 2 then was never finished. Yeah, as long as we don't go above 21,900, this view would still be very much valid. Yeah. We just need to understand how likely it is, and therefore we take a look at the Fibonacci retracement levels. And I mean, with this wave 2 in red, we really only touched the 61.8% Fib level. I mean, for a wave 2, it's pretty common to also go down, or up in this case, to the 78.6% Fib level. That would be at 21.27K. So it doesn't invalidate anything. These are just the most likely ones here, the 50% Fib level, maybe to the 78.6. If we go to the 88.7, still possible, but anything above 21,624 again will be very unlikely that it still is the bearish scenario. Okay, so for now we can look here in the bearish scenario. We still have it on the table, yeah, and as I said in the last video, we need to look for key levels to be broken to confirm it, which would basically be the invalidation points of the bullish scenario. So here, very important is the $18,600 level. To be breaking that would, in my view, confirm with a very high likelihood that we are in this wave 3 in yellow. That ideally would start here very soon if we are in the bearish scenario. Either way, we are looking now for either a wave 3 here in the bearish scenario, or in the bullish one, it would be a wave 3 to the upside, yeah, which would also be very bullish. So it could be an interesting day today. Yeah, we might have a decision today into which scenario we go, and then we can follow that through with more confidence. At the moment, we're just in this possible turnaround space, and yeah, we're looking for evidence which scenario is playing out. If you ask me which one is more likely, in my opinion, as I said, the bearish one, purely because we have not broken structural resistance yet, and we can understand it at the moment both as bullish and bearish, and therefore we're waiting for key levels to be broken to get confirmation. Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.